Dear guys, welcome back, right? And if you're watching this video and you're looking for a simple strategy on how to trade, this video is going to help you a lot, right? So, similar to myself, I've been watching a couple of YouTube videos, I've read a couple of books, and based on the knowledge that I've been able to get, that's what I'm going to be explaining in this specific video, right? It's a very simple strategy, and let me walk you guys through, right? So the strategy focuses on our fundamentals, right? So our fundamentals here is going to be what I refer to as our key metrics. So we will be identifying key levels, areas of interest, as support and resistance areas, or as supply and demand zones, right? So these are fundamental concepts that you need to plot within your chart, right? So the strategy is based on these specific key metrics. So whenever the price will react at any of these specific levels, you're simply going to buy or you'll sell. That's what the strategy is all about in simple terms. It's very simple and very straightforward, right? So if you have any questions, you can also leave a comment in the description below. But I'm going to explain the strategy step by step. Anyone watching this can adopt this, right? Okay, so let's start. So step number one, you need to identify the market trend. The first step here is to identify the market trend, right? And we'll be identifying the market on a 15-minute time frame, and then we'll start identifying the market from last week. So we'll count the last previous week, so from Monday to Friday of last week. So we'll be identifying the trend of the market from the past week, right? So the past week, today we're the 27th. So let's start looking at the market from the 22nd or from the 23rd. So we go back to the 22nd and then 23rd. Let's look at the 23rd. Okay, let's just do 22nd, right? So from the 27th to the 26th, you'll notice that we are in an upward trend. It's a bullish market, right? And what makes the market a bullish market? It is a bullish market because step number one, we're in an upward trend. Step number two, we have a series of higher highs and higher lows. So if you're plotting your chart, so if I take this away, let me just delete this. For example, right? So if you use one of these path brushes here, right, you could plot the chart and then you see we are following a series of higher highs, higher lows. So the market keeps on going high, it goes down, goes high, down. So that's the upward trend, right? We can do this and it's going to be the same. Higher highs, higher lows. That's how we know we are in an upward trend. So that's step number one. So what does that also mean? It also means that we had a lot of buyers pushing the prices upward, right? So that's step number one. Step number two, do your own research on these specific key metrics areas, right? So on your key levels, understand what a key level is, what an area of interest is, how do you plot your support and resistance, what is a support, what is a resistance, and what is your supply and demand. The concepts are very simple, right? They are simply zones within a trend line. And you remember we have an upward trend line, we have a downward trend line, and we have an area of continuation or an area of consolidation, right? Also remember that whenever your prices will break above any of your support or resistance areas, you're either going to buy or you're either going to sell. That's the strategy. It's a very simple strategy, as I mentioned, right? Okay, so the strategy here is kind of like interpreted in the form of, so our key levels, areas of interest or as support and resistance or supply and demand areas are imputed in the chart as a previous week high, a previous week low, a previous day high, a previous day low, a previous day close, and you're going to be doing this setup on a Monday. So Monday, when you're analyzing the chart, Monday or Sunday, when you're analyzing the chart, this will be the setup you'll be using for this specific strategy. Once again, remember, we always start from the previous week. We analyze the market, so the trend of the market from that previous week. We also do not advise people to trade when the market is in a continuation. So if the market is just continuing within a specific supply and demand zone, right, without breaking on the high or breaking on the low, do not trade within that specific continuation. We call that consolidation. Do not trade within this specific zone. We only trade whenever there is a break or whenever it breaks above. Example here, it broke above here, so we had a confirmation here. Sorry, I'm going to delete that. Took a Fibonacci instead. Let me go. Let me use the long and short instead. Long and short. So here, let's just say whenever the market broke here, you could have just bought, right? Let's say even if you bought and you had your stop loss here, you notice that you would have made some little profit, right? And you'd have made 41 pips, right? And also, whenever you're taking profit, your take profit is always to the next or to the highest resistance area, right? So that's how to plot in your take profit. So you'll be taking your profit at this specific level here. So at 1.359.1, that's where you'll be taking your profit, right? But anyways, that's just an example. So if it makes sense so far, just drop a comment in the description. Just drop a 1 in the description below, right? Just drop a 1. So let me just recap what we said again, right? So you're only trading based on these specific areas, right? And these areas here, so your previous week high, previous week low, previous day high, previous day low, and your previous day close, they all represent key levels. Other people will call it areas of interest or your support and resistance areas. That is what this here translates into this. I prefer to call it key metrics. People have different names, but that's what I call it. So when it comes to how do you know when to enter and exit a trade? So I just called it key entry and exit points, right? Your confirmation here now depends entirely on the candlestick formation patterns. So in other words, it depends on your ability to be able to read the chart. Remember, we already know we already know the market structure or the market trend. It's an upward trend. So we have more buyers, which is good. Step number 1. But how do you know, regardless of, so whenever the price is reaching near a support zone or if it's trying to break above a resistance area, right? How do you know if you're going to buy or if you're going to sell? So what are the specific indicators? So this video here talks, so in this video, we are only looking for engulfing opportunities, right? This video, we're focusing only on engulfing opportunities. So we have to understand the concept of engulfing, right? So we have 2 types of engulfing candles. We have a bearish engulfing and we have a bullish engulfing. Remember that bearish means we are selling, bullish means we are buying. So bullish means prices are going up, bearish means prices will be going down. So what are the specific candles which would demonstrate or show that we are in a bullish engulfing or we are in a bearish engulfing pattern? So we're looking for patterns, right? So let me just increase the chart here. Increase the chart here. So for your I'm going to start with the let me just start with the bullish engulfing, right? So how do you identify a bullish engulfing? For your bullish engulfing, whenever you see a smaller red candle that has formed completely, and then you see a larger green candle, and then it simply signifies that the larger candle is engulfing the reddish candle. So this is a way you can identify specific confirmations, right? So whenever you see a small red candle and a larger green candle, just know that your prices will always go up. Prices will go up. Your prices, it's gonna go up. Prices are gonna go up. So just do some research on bullish engulfing, right? But what you should take from this is that whenever you see a red candle, a smaller red candle, and a larger green candle, prices are gonna go up. Regardless of, prices are gonna go up. So that's an entry point to go for a long position, right? So that's what we call your confirmations. That's gonna be a confirmation, right? So now let's look for a reversal, when to sell. And this is how I entered this trade today, right? So whenever we see a red candle or a bearish candle that engulfs a bullish candle, so your bullish candle is going to be smaller than your bearish candle, we know that prices are definitely going to drop. So that's a confirmation to start selling. And remember, where do we sell? We only sell at a specific key level area or an area of interest. So we only sell at the supply or at the demand, at the supply or demand zone, or we sell at the supply or resistance area or at the key level area. If that is making sense, drop a comment in the description down below. But before, okay, I'm gonna stay.